Everyone, welcome to today's session. Let's get underway here. First of all, before we get started, if you have any questions that you can think of that you want me to cover, feel free to just type those in there. There's a little panel there, I think, on the right side of the screen. You can just type it in. It says questions, and we can cover anything that that you may want to go over. Let's jump in and look at a little market analysis here. Currently, we've seen pretty decent volatility today. As of last night's update, this had adjusted back up to a mildly bullish just because of that counter trend that was starting right here. And we there's a question typed in here. This is what happened to Jesse. This is Jesse. I am Jesse. It was Jerry McCann that was teaching them prior. And so I'm going to be taking, he's no longer going to be presenting in these. I'll be taking over from here, but I'm Jesse Webb. I'm the creator of the software, and so hopefully you can find some value out of my my blather as we get into some of these presentations. But market conditions, we'll jump into here. Let me go back here. Buy sell ratio, we'll look at that because this is the one that typically, you know, we'll have an uptrend, it'll expand, and then we get a pullback, and then we typically get one more move higher, something like this, or even something like this, or something like this, you know, this, even here, this first one and then this second one. So oh, okay, yeah, no problem on that. Yeah, we're just making a few changes regarding being able to implement the software just a little bit more and have these trainings a little bit more specific to utilizing the software. Buy sell ratio. So we talked on what's today, Thursday, Tuesday, just about this market, what's happening, this sell-off, this little counter trend. As of Tuesday, we were sitting, I don't know, probably over here. We'll look at that S&P 500 chart in just a minute, and we have sentiment, which was extreme. So not surprising that we saw a little bounce, a little counter trend back up. But now that we've shifted the sentiment, there's this 50% line across here, and that needs to be an area, and that sentiment is just found here and then under market trend. And so any counter trends that we get, we're going to run into some resistance again. We may not even get that. We'll look at that S&P chart today because it's selling off pretty aggressively. And then buy sell ratio, like we just talked about also. So we're definitely solid into this sell range, which is just really a bearish trend. And we had been all the way down here. We had dipped down to that extreme zone, and this is typically what will happen in an uptrend or a downtrend. Is it'll maneuver inside of this zone, back and forth and back and forth. If it goes from extreme back up into the sell zone, and then if it is in a bearish trend, it'll typically start to move back the other direction. If it's not, and if it's starting to transition, it'll maybe tick back up into this hold range and then ultimately reverse back up into the buy. So the yellow zone, if we get into that, that's kind of that pause and you know, which direction are we ultimately going to go? We haven't gotten there on the market as of this counter trend right now. Now counter trend, I'm talking about this move down and then moving back up against that counter trend. Whether or not, obviously, this is our current long-term trend, at least long-term in the last 6 months, and then retracing back down. We never did get to this 382 retracement. There's another major really support shelf that's sitting right there. As of this bar, if this bar holds, it's pretty nice engulfing pattern. It gapped higher and then has been trading lower all day long. If that continues to hold, more than likely we'll see some continued sliding, and this 429 range is going to be that magnet that we're looking for. And then another reaction. We'll get some kind of a support level, a reaction. If we bounce right here, same story. If we bounce, head back up, find more resistance, and then ultimately head lower. Or if we end up closing up above this area, then we may get some momentum higher. So lots of volatility, I think, is going to be happening here over the next few weeks with a bearish tone, with a little bearish bias, at least in the short term, unless as of the market today. This will be a pretty bearish day if we close with that much of a bearish gap higher and then moving lower. The Qs, the Nasdaq 100 is even more bearish. And this is a pretty traditional pattern when we slide through the first trend and break through that, and then find some kind of a, oops, that wasn't a very good line. And then we find some kind of a support area here. So we break through these uptrends, and we retest the underside of that support area, which was here and which was here. And so we're doing that on the NASDAQ. This typically, if we get acceleration here, this typically is a pretty aggressive move down. When we get that first move, a counter trend, and if we get one more move, and if it's particularly if it breaks this support area, then we can really see some selling start to accelerate. Although let's see that momentum number, we're sitting at negative 0.68, so it's yellow, still kind of hovering over that red, but it is back up into that. If it's negative 70 or lower, that's that bearish. It'll move it back into that bearish trend. So it could still get there today on NASDAQ, which is, again, that's a pretty ugly chart right there. NVIDIA had its earnings the other night or last night, and so that was really kind of everything. Oops, NVDA. That was what the market really has been waiting on, and oh, got another slow connection here. Hopefully that's not going to cause any drama for us. NVDA. There we go. Up into the extreme range. You know, really, it gapped up. It was as high as 7 or 8% in after hours last night, gapping higher, selling lower, and potentially finding some support right here. Just a fantastic, phenomenal quarter that these guys had. More than likely will continue to do so over the next year or two as AI really accelerates, and NVIDIA is just a large chip maker. They do graphic interface chips, which have just amazing computational power, and they're using gaming. They really started out kind of as a gaming chip developer, and they've now morphed over into crypto mining and AI, just because the computational power of their chips are more robust than anyone else. And so they really are the giant, and really have all the major market share. So it's not surprising that they're taking off, and their earnings report, their earnings call was for just huge demand going even into next year. So definitely one to be watching. Needs potential little pullback here. It's, you know, over this last couple of years, it's really gone straight up. It's right at the upper end of that trend. But that's what we want to see as momentum traders. We want to see stocks that are breaking out new highs and then continuing that overall zone. So one of the things I've talked about is this upper quarter of the trend. When this fib snap tool, which is this box right here, is connecting to a new high, or even if it's not connecting to a new high, the most recent high, it gives us a range, it gives us a zone to be able to focus on. So if I were to move this chart back here, you can see, and it was connected to this most recent high. That upper quarter, it dropped below it for a day, and then I think it was the next day it moved back up. So it's finding support inside of that range. There was also just a huge amount of support right here. Remember to always go back to the left and look to see what's over there as well. There's major support happening, and then as it's rallying higher and it's still connected, now we're in the upper trend zone. We're in this upper quarter of the chart, and this is most of the time where we want to be playing, because stocks that are having really strong uptrends, they typically don't. They may find some support here, but they typically don't break through that and head even lower. They typically will stay in that upper range, and depending on the time frame that you look at, it just creates a little wider range. So if I'm looking at a 1-year chart, you can see that it's connecting to a larger trend all the way down to the bottom, and it did find support very similar to that and is now connecting to that high. So up inside this upper range, this kind of becomes the playground for a stock. If it breaks through that, then we may look at adjusting stop losses or exiting the position. But most of the time when we're looking for momentum style stocks and they're moving higher, that's the location that we want to be focusing on. So NVIDIA looking really good right here. I also wanted to jump in and talk about the sector ETFs that we looked at on Tuesday, and see if we've got any adjustment right there as well. And we've got still pretty aggressive down. I think we had almost all of them as down, but now they're either sell or down. Technology's having a little up day, at least it was, and that's going to be reversing there as well. So still pretty bearish chart patterns for all major sectors and really all indices, and markets are, you know, bears are in charge as of today, and that we could see some continued acceleration to that downside. A couple of other things that I wanted to go over is just a refresher on some of the uses of the tabs. The index tab, for example, if you're looking, you know, if we're looking at the NASDAQ 100 and we're just saying, you know, which direction, what's the weight that we should be focusing on or realizing what is happening here, and this could be a quick glance as well. So if we're looking at the Qs, the QQQ, that's just an ETF for this, for the NASDAQ 100. So we could say, what direction do we think that the Qs are going to be going? And we could look at this buy-sell ratio, and we're just heavily weighted to the downside. 40 of those stocks, almost 40, are in down trends. The other 40 are in holds, and then 10, 11 inside of that buy zone. So it's not a solid uptrend, and it's accelerating downtrend and weakening, and a whole bunch of stocks that are just stuck right there in the middle of that chart. So you can glance at those, and that also is a market bias. It's a market breadth indicator to say what direction are we going. Is the Dow utilizing these buy-sell ratios? Okay, so the buy-sell ratio is simply taking the number of buys and sells and creating a ratio. Okay, if we had 10 buys and we had 1 sell, the buy-sell ratio would be 10. Okay, if we've got 1 buy and 10 sells, the buy-sell ratio is going to be what, 0.10, something in that direction is going to be low. Even like right here, you can see that 0.29. So it's the smaller the number, the more bearish. The larger the number, the more bullish. And we're seeing, you can see all of these buy-sell ratios right now. And then you ultimately get the average buy-sell ratio over on the where'd my tabs go here, the buy-sell ratio. Okay, so this one here, when we're looking at that, that's taking into account all of them combined, and we're at a 0.2. So that historically, you know, going back to even some of these levels here, you can see 0.7, 0.07, 0.12, 0.11, 14, 19, 17. Okay, and we're sitting right here, 0.2, 0.16. So we're not as wide as we can be, and another acceleration to the downside could probably take us there, and then we may get a bounce. Okay, we'll be watching for those support zones on the bounce, but these can also give us some indication of an extreme, and we've had a pretty nice sell-off here in the last month, during this month, and that's one of the other breadth type ideas to be looking for, to say, should we be aggressively bullish right here when we have every single one of these buy-sell ratios across all these indices at a 0.2 or less? Not yet, but potentially getting close for a bounce or a tradable bottom, or maybe not. Maybe we just continue to slide. That's kind of the question. The big question right now is, are we retracing the bull market, retracing the bear market of last year? Is this ultimately the major trend, and this is counter trending that, and then we have more downside to come, and we're just kind of topping that and beginning that process right here? This is flattening, this is rolling over. Obviously, we don't know the future, and as acceleration starts to happen, then, you know, we don't want to be stuck being down here saying, oh man, yep, sure enough, that was the downtrend. We've got enough clues right now to say we need to be the majority in cash, you know, in terms of a trading account. If you have longer term holdings and 401k money and things like that, that's a little bit different approach. You can certainly do the same thing as well, and just focusing on allocation. Just don't want to be overly aggressive equities right now, because there's a lot of volatility economically, we've talked about this also, that bond yield curve. This is something that the economy has got to deal with, and that needs to change. Ultimately, for there to be a real recovery, that this has got to shift. Okay, and the only way for that to shift is for the Fed, the bonds have got to see that the things are going to be changing the economy and moving lower, and anticipating that the Fed's not going to be doing anything else either. So they need to stop tightening and start lowering interest rates in order for that bond yield curve to adjust. They're not even close to that. Okay, so the discussion has nothing to do with. It has some discussion with pausing, but it doesn't have any discussion about lowering at all. So those potentially could be some headwinds going into this next year, and be able to allocate accordingly, especially as we're seeing some acceleration in really across the board. And we're also seeing additional acceleration in some of these others like real estate. Real estate has been really the sector that's gotten beat up the most in this last downturn. And utilities, interestingly enough, is also really in a nasty downslide. Consumer staples, consumer goods, I would have thought that those would hold up fairly well, but everything is getting beat up right now. Some potential support areas on those, but just not a lot to be excited about when it comes to bullishness in the market right here. And that's why, try not to force anything or be overly aggressive, and just watching for some better opportunities as they start to present themselves, and that might take a little bit of time. This notoriously is a volatile time of year, traditionally with some downturns in September, October, and then November, December historically have been a little bit better. So we'll see if that follows along right here also. Let's take a look at a few different ideas to see if there's anything interesting. One of the first places that I like to look is if you come to the muscle stocks tab, because these are the high flyers. And so when we see a market down day and we're seeing some of these really strong trending stocks moving, we if they're selling off aggressively, then that could be an indication that everything's getting tossed out. The AAOI has been a big one here. It's holding up inside that upper zone, 7% down today, not surprising, and definitely inside of the volatility range, which is fine. CABA, this is one that wants to break out so bad, this tight channel right here. It's just holding and holding and holding for a really long time. That's a medical biomed stock. Again, all of these stocks, the muscle stocks tend to be pretty volatile. They're smaller cap. They're maybe new ideas. They're in a little bit more speculative marketplaces like biotech, or they may be new ideas, new technology, and the company doesn't necessarily have earnings yet, and there's some risk associated to that. So, but at the same time, that's a reward to risk game that we want to be able to participate in. LMB, this is a stock that just keeps cruising higher and higher. If I take this last, and one of the things I've mentioned before is how high is high. When you're looking at a chart, oftentimes, and I don't know what it is about our idea of the way that it could be a human brain situation, and that is when we're looking at a stock chart, we just assume that because it's at the top of the chart that it's considered high, okay, because this is low, and that it may become low again, reverse and head all the way back down. And sometimes that happens, but when you have a company that is looking like this, and you have annual earnings per share growing, positive ROE, quarter EPS is growing, sales growth not a ton here, but everything is growing and working, then typically those stocks will continue to trend higher, especially if they're in that upper zone. So I could say how high is high? Well, this is connecting the high point of the current time frame, 6 months. Well, then we had an earnings report, it gaps higher. This now is the new high zone. We keep going along. Here's a few more days, retracement back down. Here's another high zone. Okay, and this is where we're at as of today. So don't let a chart fool you, because when we were looking at that chart right here, we would have thought, well, that's high. well, this is high. Well, at some point, you know, maybe down the road when it's $140 and it just keeps doing this and doing this and doing this and doing this, I think that's where a lot of traders cut themselves short because they're afraid that it's already moved high and it's going to retrace and move back lower. It certainly could happen, but the path of least resistance is up. When you see a chart like this, the path of least resistance is up. All of the resistance, the path of most resistance is down because there's all of these levels. Everybody that's been buying all the way along here is not going, they're going to be buying more at every level that they bought. They're going to be buying more. That's what creates these supply demand zones. Is it's a good company and it's a quality growth story and growth name. And so you've got large institutions that are not as focused on the stock price as they are on the company and the company's growth. And so as it pulls back, they look at that as opportunities to add more shares and buy more stock. So as it's dropping, and vice versa, you get a negative earnings report and they give bad guidance, and then it's like the game changes. It's like, wow, okay, now the rules have changed and the company is saying we may have some weakness. Then you may get additional selling and sell first and ask questions later type of mentality. So these muscle stocks, as they're continuing high, it's a great place to be looking for new ideas, especially if they're stocks that are not extreme. This is just barely starting to that extreme, but not that bad. VRT is another one, big earnings report, big gap, trading inside of that range as it's pulling back. Okay, let's say we were a couple of days ago and I'm seeing something like this. Maybe I'm not in the trade yet. You can see over on the left over here as I'm mousing over that. In fact, I'll just change this to the signals. And then you get the first buy after a hold signal. You could say, there's my new entry. If I hadn't bought into it, I would here, or really anywhere inside of this zone, and setting a stop loss a little bit lower, 10 or 15%, allowing yourself for some volatility and getting some upside on some of these names. So that's the muscle stocks. That's the top 4 or 5 in muscle stocks. And there's some that are really moving in here. Make sure that you look at volume. If you go into your brokerage account, and you know, this is not bad. That's 0.26 million, which is 250,000 shares average per day. But sometimes there's some really thinly traded ones that pop in here. I think the average that I've got set on this is well, at least 50,000. So that's not very many. So typically it's pulling at least stocks that have, you know, some decent volume in there. And just some really nice looking names that are continuing higher. Remember that information that is known or anticipated about a company is going to show up in the stock price. So when a company either has really, you know, they're really moving high like this, it's gone from $2 to $15 really in the last 3 or 4 months, is you know, then you could go in and do a little bit more homework. Go in and take a look at, you know, I like to go to this Google tab and then check out any news items, and then I like to go out to the website here as well and kind of do a little bit of homework and see what do these guys even do. Okay, so AOI is the world leading supplier of diode lasers. Okay, so diode lasers, that tells a story really quickly right there. What is that? Is it, you know, are they using that in medicine? Are they using it in, you know, semiconductor fabrication? What exactly? And you can spend just a couple minutes. I think it's fun. I'm a business junkie. I know a lot of you probably are as well, and learning to find out what on earth is moving this stock, and then say, oh, okay, I see. Maybe it does have to do with AI. Maybe these guys are selling products to NVIDIA to build out NVIDIA's type of stuff. Let's see. The world leading supplier of diode lasers, related modules and equipment. We manufacture our devices in our own semiconductor fabrication. Complete. Yeah, I'm not going to go through all that, but that's one quick way to be able to just scan and say, what do these guys do? What are we looking at? Go down to that Google chart, then go out to their website. There's just a link out to the website. It's kind of a fun process to be able to do. Let's see, Nancy. Yes, ACHR. So ACHR, this was one that I covered in a report the other day. And so same story on this stock. You're getting you're up in this upper range of trend. It's a very volatile stock already. It's a speculative stock because there are no earnings yet. and and there's volatility in who's buying and selling right here. So a little bit of a down day retracement. But in this case, if I were to buy and focus on a stock like this, I would set a relatively wide stop. Let's actually go back to about where I think I did the analysis right here. So the first buy after a hold, it's sitting right here. If we buy the next day, so in this case, you could say, where do I want my risk level in initial capital? Because remember, that initial capital is the first time you're investing in something or trading into something, and that's your hard-earned money, right? That's your $1,000, your 5,000, your 10,000, whatever the amount is. That it's like, man, I don't want to lose any of this. I don't want to even risk a lot of it. So how could I approach it in a way that I don't prematurely get stopped out, but that I'm also comfortable with a certain range of volatility? So one of the approaches to do is to say, how much volatility should I or could I expect in this stock? And if you're to go all the way down to that 382 retracement level, or even a 50%, 50% might be a little rich, but we'll look at these numbers and I'd say, okay, if I'm going to buy it on the next day, let's say I think it ended up gapping just a little bit, but let's move that next day, say right here. So the open, let's say I was ready and I bought it at the open at 630. Okay, let's look to see about how I would want to manage my risk on this. So if I went to portfolio and I had $100,000 account and I decided that, what was the open on that? It was 633. So if I did 633, now I want to determine my number of shares. So I know that 100 shares is going to be $600. 200 is going to be about 12. So let's say 300. So a couple of thousand. Let's go up a little bit more. Let's go 400. So $2,500. Is that enough? Is that too much? Is that too little? Okay, I've got to start out with that question. Then I also want to look at my stop over here. I said that I would place a stop somewhere down below that 382. That's 527. Let's just set it at $5. My stop loss at $5. Okay, what that does now is it sets a risk parameter. In this case, I know that if I'm wrong, or if this stock reverses and it moves all the way back down to where's my right here, and if it moves from here where my first buy point is all the way down to here, and I'm like, man, I don't know if I want to stay around. I don't know if I want to stick around and play anymore. Okay, it's dropping. Now I'm down by this amount. I'm down in this case by 21%. So that's a 21% stop loss. I have $532 at risk. If the $532 at risk is too much, then I have two things I can control. I can control my stop loss. Okay, so I may say I'm fine with a $5 stop loss, but I need less shares. So I've got to go down to 300. Now you'll notice that number changed. My 21% stayed the same, but this number got smaller because I had a smaller position. Those are the two things that typically hurt traders the most, and that is a position size that's too large and being on the wrong side of the market. Okay, and so those are two things that ultimately can be controlled. The direction of the market and the volatility of the stock, obviously we can't control that, but we want to for sure always manage the risk to be like, okay, yeah, that really sucked, but I got stopped out and I lost $400 on that trade, but maybe I have 4 or 5 or 6 or 7 others at this kind of an amount size. This small of an allocation would allow you $2,000, and a $100,000 account would allow you for about 50 holdings. I wouldn't go any more than 50. I typically wouldn't go any more than 20 or 25. Buffett typically has around 45 holdings, and that's in Berkshire Hathaway, and he typically doesn't go much higher than that. So he doesn't like to be overly diversified. He likes to be pretty concentrated. So 50, 50 that's kind of a big number, but you're well diversified. You're going to have some big winners. It allows for some volatility, and it allows you to stay in the game a lot longer. Okay, we all typically want it, and we want it now, and so we take too big of a position, and then we have a blow up, and it hurts us, and then we're and then we're out of the game. We can't even play anymore because we took too much risk. Okay, so keeping the risk size within a comfort zone that you're comfortable with. Now, in terms of the analysis on the stock, if we bought it here, if we bought it here, I don't know why that did that. Hold shift to draw. I don't want to do that. Go away. There you go. Okay. If we had determined that our stop loss was here and our entry was here, then this is just normal volatility. It's normal volatility inside of this range on a down day. If the market really unwinds and heads lower, yeah, this could retrace. This could be the top of the trend, and it could move all the way back down. But this is the line in the sand right here where we're saying, okay, $5 is our stop location. I don't know why it's moving lower. I don't know why it's moving higher, but I'm losing at this point, and I don't want to lose any more than the initial amount that I was prepared to lose or prepared to risk. And then you know what you're dealing with. The worst case scenario is never knowing what you're dealing with in terms of the risk. How much risk am I taking? Oh, I don't know. I'm just going to buy it and put 10,000 in it and see what happens. Well, that's not a plan. That's because there's going to be a scenario where you feel like this is dropping, and then you're like, oh crap, okay, oh man, all right, well, whatever, okay, and now you're down here, and then you're like, okay, I'm not even gonna look at my account anymore. I'm just gonna wait and see, and hopefully it recovers. And a lot of cases, that does, but this is a gut wrenching experience, and in some cases it doesn't on a stock that has been 3 or 4 months ago only at $1 and a half. There's some volatility that could be associated to that. So on some of these stocks that are speculative type stocks, newer companies, really not entirely proven yet, then you may want to have a decent stop loss range to allow for the volatility, even back. And I think that $5 range, clear back down below that gap, would allow for enough volatility to say, okay, 20% from here. If it retraced back by 20-25%, then I'm out. I'm out, and I'll wait. And that's okay. That happens. You wait. Maybe it retraces even lower, and then it turns back up, and then it starts to move back up again. You can always get back in. Think of right now. We're starting. My son is 11, and we're playing 11-year-old football. And that's one of the things we're teaching these boys is, listen, that play is over. When that play is over, it's over. There's absolutely nothing you can do about what just happened. The only thing you can do is move into the next play and do it better, and think of it better, or execute better. There's nothing you can do about what just happened. Same idea with a trade. If you get stopped out, you had the risk set up. You had your profile set up. So in this case, it would have been a successful money management, but you can't beat yourself up and say, oh, okay, this stupid stock, I'm never going to touch that thing again. That thing lost me money. Okay, whatever. I'm going to X that thing out of my life for good. Then no, it doesn't make any sense. Just wait for a new opportunity. Let it set back up again. If it sets back up again, retraces, moves higher, gives you another uptrend, there's opportunity there to maybe jump in it. The other way is just flat out don't set a stop loss at all and have a really small position. Okay, that's one I don't typically do, but I know traders that will do that and say, I'm not going to have a stop loss at all. I'm going to have the entire amount. If this thing goes to zero, then I'm willing to put 600 at risk, $100, 100 shares, and risk $600. And even if it dropped by 50%, I'm willing to lose, $300 or $400. So those are the things you can control, is your position size and your stop losses. And honestly, that using that methodology of risk management, you'll sleep at night a whole lot better, because you can tolerate a lot more volatility when and especially if you're being more aggressive, or you're trading options and you're trading a large position and you're swinging for the fences. Well, you're going to strike out sometimes too in those kind of trades. And if a strikeout blows up an account or is a really major issue, then your position was way too big to begin with. So rule number one, always manage that position so that if and when you lose, it's not a big deal. Okay, so that you can continue to play and not have it affect your livelihood or your finances, or do you have to go get a second mortgage on the house, something like that. I've seen in 25 years, I've seen crazier things happen than you know, people do some really dumb things when it comes to risk and money management. It doesn't have to be that way. So hopefully that's helpful. What I would be watching for is to see how it closes today. It could retest. It's still kind of holding. There's a lot of support right here. And remember from the report, I updated that there's a lot of volume going into this stock right here in this last month. So you had all of these buyers, millions and millions of shares. Well, where did they buy? They bought a whole bunch inside of this block. Okay, if they believed in the story right here and right here and right here and right here, if it retraces back down again, you better believe they're going to continue to be adding into that at this point. Okay, they believe in that story. That's millions of shares going to prop up this share price at this location. So think of this as one big giant block. If it were to retrace back down, then yeah, something may be happening there. And again, that's why we've got to set a stop loss in place. Great question. It's always fun to evaluate a stock. I'm just going to recap here. Just let's jump back in and look at the market and see where we're at on S&P 500. Sorry about my connection here. S&P continuing. Yeah, we're still right where we were. Pretty bearish day. Again, I would anticipate more downside, at least to retest these lows or that 382, that 429 on S&P 500. At that point, we may get some support again and be able to reevaluate. But we're pretty strongly in this downtrend now, in this shorter term downtrend. They don't always last. They don't last forever, but there's some change in the wind here on this price pattern. This is a pretty bearish pattern, especially if we break down and can't hold up those support areas. So I'll end on that note. Thanks everyone for your time and effort, and have a fantastic day today.